Appreciate it. Want to thank you all for being here this morning. Thank you for sticking around. And let's take a minute to pray. And Heavenly Father, Almighty God, it's in Jesus' mighty name we do come. We thank you, Lord, for blessing us to be here this day. I pray, God Almighty, I ask that you speak through me this day, Lord God Almighty. I pray that everyone receives something from having come. In Jesus' mighty name we do pray. Amen. I do thank you all for having me here again for speaking here, and also for speaking particularly on finances and doing my part two. The first time, back in March of 2022, I had started on speaking on this subject, and I had like 20 points, which was, unrealistic to actually finish that. So I did 10 then, so I'm going to do 10 now, but 3 of the 10 will be actually repeated from the last time. But it's for a purpose, though. There's some emphasis that are on the first 3 for a purpose that I'm repeating now. God allows us to make money, but we're to use that money that God gives us wisely. We're to be good stewards, accountants, for what God has given us. And some people, they be thinking that, if I just had a little bit more. And the thing is that God, if you're not being wise with the little you have, it's not like he's going to give you more. I mean, that wouldn't make much sense, to do that. Don't expect more if you're not handling wisely or well with little. Now, the 10 points that I would like to cover today we're going to bring up a PowerPoint just to show you the things that I'm going to attempt to do. No, I'm going to do them. Each one of these points could be taken an hour for, but we're going to do all of this in 1 hour. So one would be on tithes and offerings. The other one, emergency funds. And then the next would be on credit reports, income taxes, Social Security, life insurance, living trust, mortgage, loans, and monthly memberships. And hit that one. And then now, the first one, though, is tithes and offering. I have to begin with that because that's like a principle. God gives us a very clear principle in Malachi chapter 3, verse 10. In New Living Translation, it reads, "Bring all the tithes into the storehouse so that there will be enough food in my temple. If you do, says the Lord of heaven's army, I will open the windows of heaven for you, and I will pour out a blessing so great you won't have enough room to take it in. Try it, put me to the test." Now, that's the only place in the Bible that I'm aware of where God says put him to test him. Because normally you don't test God. I mean, that's not wise. But but in this case, he's given us the privilege to do that. Just like test me, check it. So the thing is that that's a principle. Now, out of 40, I've been married for 42 years. My wife passed in July of this year, but I was married for 42 years. And of that time period that we were married, and got married at 18, I'm going to let you do the math to figure out how old I am. During that time, I can only think of one time that I did not pay tithes. And it was, intentionally. Now, I may have unintentionally, did something like receive something and didn't think about it. But basically, off of wage income, there was only one time that I can recall not doing that. And the Lord taught me a lesson that one time. And in that one time, at the time, my tithes, this was 42 years ago. No, 40 years ago when it happened. About 40 years ago, my tithe was $20 a week. Now, if that, $20 today is a whole lot different than it was 42 years ago, or 40 years ago. But at that time, I had to make a choice because a bill due to J.C. Penney's, and it was $20. And it was like, well, Lord, do I pay the $20 to J.C. or do I pay the tithes? So with my wisdom, I figured, the Lord wouldn't want me not to pay bills. So it's like, well, let me go pay this $20. Now, at the time, $20 back then was like what $100 would be to me today. I lost the $20. And so it was like, oh, my goodness. So I was distraught, for a whole week. And I got paid weekly at that time. So it's, I was distraught. And I was, every day since I can remember, at least even as a young boy, I would read. My mother taught me to read the book of Proverbs, and I would read Proverbs. And I don't know when this started, but I would read Proverbs in relationship, and still today, in relationship to the day of the week. That's not the only thing I read, or only Bible, but only chapter I read of the Bible. But I mean, that's one of the the main ones, not main ones, but one of the ones that I would read consistently is Proverbs in relationship to the day of the week. Well, during that week, what I read was in Proverbs 3, verses 9 through 10. Honor the Lord with thy substance and with the first fruits of all thine increase, so shall thy barns be filled with plenty, and thy press shall burst out with new wines. Now, we don't plant fruit now, we do plant it, but we don't we don't do it necessarily to sell it. But the thing is, we are to tithe on what God gives us, So it's not a questionable thing. It's flat out. So now, or ever since that incident, or incidentally, the next week I did go ahead and make up, for the tithes that I didn't pay, and the Lord blessed me to find the $20. Well, actually, I don't think it was lost. Well, it definitely wasn't. It was lost to me. I believe the Lord placed the $20. That we had a desk phone in our bedroom. The $20 was under the phone. Now, I would not put $20 under the phone. I believe the Lord just put that there and said, look, don't you do it again if you want to. Now, I am not hard-headed. Normally it only takes me one time to learn a lesson, and that's it. So I never did that again. Never did that again. Now, I tithe on everything. If I got a rebate the other day, I tied it on that. So, and when I start that day to receive pension or Social Security, I would tithe on that as well. It's not a questionable thing. When you do tithe, it's just tithing on the gross, not the net. So now, that is that. Nope, it's one other thing. I know some people are going to say, well, the tithing is the law. Well, it's true. You could put it in that's saying it's the law. However, we are under grace, which means you should do more than that. So actually, I do more than 10%, but a tithe is a tenth. So if you're having an issue with that, then read Matthew chapter 23. And what it says to you, what Jesus is saying there is, woe to you, scribes and Pharisees, hypocrites, for you pay tithe of mint and anise and cumin, and have omitted the weightier matters of the law, judgment, mercy, faith, and faith. These ought to have ye done, and not to leave the other undone, the tithes undone. Now, so meaning that it's a New Testament thing too. Jesus just didn't emphasize on it because people were already doing it. It wasn't like something we had to teach them to do because they were doing it. It's today where people have issues, issues with it. Now, when a person gives offerings, that's different than tithe. That's in addition. So you can't say, well, I'm going to take part of my tithes and give to the Trinity Hall. No, those are separate things. That is not something that you would take from your tithes to give. Number two, or second point, emergency funds. Life happens. It's important to always have an emergency fund. I would recommend starting at $1,000, and then from there on, have 6 months of your monthly expenses, take on the side just in case something happens. But at least for emergency points, at least have $1,000, because things will happen, and at least you'll be prepared and won't be distraught over $1,000. At one time, this was back, 40 years ago, I messed up by not having an emergency fund, and I had a bill that was well, it wasn't a bill, it was a mortgage. It was $365 at the time. And I was short on that. And the reason why I got short is because I was relying on some other money, which I'll get to on a different point. But the thing is that you should always have something, at least $1,000 to back you up in case something happens. Because things just happen. They happen. That's it. Now, Christmas is around the corner. Do not use your emergency fund to buy Christmas gifts. That's a whole separate thing. If you do it, now Christmas is going to happen. It happens every year on the 25th of December. It's not something that just hits you. Now, birthdays, they happen. Graduations happens, weddings happens. All these things happen. Budget for them. Now, check this out. If you don't give the gift, nothing's going to happen. They may talk about you, but that's it. That's it. So don't worry about it. Now, if you are going to give, if you are going to buy something, if if you use a charge card, if you cannot pay that off within 30 days before the interest hits on that, just don't do it. Just don't do it. It is not worth it. And make it up on their birthday. So for some folks, what I do, I just make up a gift or give a gift on their birthday instead. Now, next, credit reports. Now some of you may be in a position where you feel like your credit score doesn't matter, and I kind of, I was at a point where credit score, because it's like, well, it's not like I'm gonna get another house. I don't need another car. It's not like I didn't think that my credit score was important. Now, my credit score was at 850. So, that's excellent anyway. So, can you go to the next slide so you can just see that's how credit scores are developed, but not developed, but determined. But as you can see, if it's 800 or higher, that's exceptional. My credit score dropped to like 750. It dropped 100 points. And I'm like, how could it drop? And the way I found that out, if you can go to the next, you can move those slides from now, so I can explain this little point why credit scores are still important. What happened was, since my wife passed, I had called an insurance company and let them know that, hey, you can remove her off my insurance policy, the auto policy, because she's not going to be driving. And it said you can also remove the vehicle, because I had given away the vehicle. So I'm thinking that the rate would drop. My insurance increased. It's like, what kind of sense does that make? I removed a person, I removed a car, and the insurance increased. And they said, well, yes, what happened, you had you're single now. So for single, I've been married for 42 years. There is discrimination against single people. It is. I have seen this. This is wrong. So I was married for 42 years, so I didn't know that single people were discriminated against. It is discrimination. And it's like, you're going to charge me a higher rate just because I'm single. And then, because it's only one vehicle, I lose the multi-vehicle discount. It's like, I said, okay, look, can you put her back on? The lady on the phone thought about it for a few minutes. I'm like, I'm not saying nothing. I'm waiting for her to tell me, okay. Then she said, no, we can't do that. Like, she ain't gonna have an accident. But it's like, okay. They said, well, let me look at your credit score. Maybe that can, help reduce your insurance rate. So that's where it becomes important. And they said, no, can't do it. I'm like, what you can't do it? I have 850. How much higher can you get? They said, no, your credit score is 750. I'm like, what? So, how can it be 750? I've reduced debt. I have less debt now than I did 6 months ago. It is like, I'm never late on anything. So how can my rate reduce? So I had to, look it up and see what went wrong. When you close accounts, your score goes down. Now I close some accounts because I got all these cards, so I don't use them. They got zero balances. I do not use them. So it's like, why am I carrying these things? So I was closing stuff, and also I closed Beverly's accounts. Now some of Beverly's accounts, I was an authorized user. So since I was an authorized user, that affected my credit. So it's like, okay, I will go to a different company. They said, well, if you save $100, would you change? I said, well, yeah. So I'm not married to the company. I have no covenant with the insurance company. Yes, I will change to save $100. So I saved $200 and change. It still was higher than what I was previously paying, but it's like, based on the circumstances, that's what I did. So your credit score is still important, even if you have no intent of buying anything or don't need anything, because of situations like that. Now, in the event that you may look for a job, some jobs will even check your credit score for jobs. Uh-oh, question?
Hi, Joe.
Hello
yeah,
there.
I'm in agreement with what you're saying there with the credit and everything.
Mm-hmm.
Just had a question.
Yes.
We had taken a couple years ago the Dave Ramsey course.
Uh-huh.
And in the Dave Ramsey course, he emphasized just the opposite of saying that you want your credit score as low as possible.
Oh, really?
So, yeah, that's what
Did he say
said.
why?
Well, he's just saying don't accumulate debt.
Okay.
That's what he was saying. He doesn't want, he was just saying don't accumulate any debt at all.
Mm-hmm.
And don't, cut up those credit cards.
Right.
That was the thing. And so, and just what you're saying, in cutting up your cards or closing your accounts,
Mm-hmm.
then that's going to decrease your credit,
Mm-hmm.
but, your credit score.
Right.
But so that is my question. So, it's kind of like you're in between. Okay, if you do that, then your score is too low
Right.
to be able to purchase and do things that you need to do later on. What's the happy medium there? I mean, do you have any idea? You know what I'm trying to say?
Well, I do know what you're saying. In Dave Ramsey, I've listened to his course before, and
Yeah.
I think he actually said, I believe he doesn't even have a rating. I'm
Well,
pretty
he
sure.
said the lower, he said
Yeah, it's like really-
society- Yeah, he was saying society really got it all backwards. The way the banks and everything assess your credit, it's really backwards. As opposed, they're looking at how much debt you're
Right.
able to handle, whether or not you pay it off on time and this, that, and the other. But if you
Right.
don't have any debt, then you know what I'm saying? So we're trying to obey God's word.
Uh-huh.
So it's just like, you're kind of like in between there.
It's-
And my question is there a happy medium of how to do it, but
Well-
yet be able, you know what I'm saying? You have any
Yeah,
ideas?
what I
think Jerry might have an answer. See,
what I do for my happy medium is that I incur debt, but I pay it off before the end of the month or within 30 days. Like I use credit cards for just about everything. If I can use a charge card to buy something, I would use a charge card. That's to keep me in the loop. But I will pay it off before any interest hit. I mean, like say within a week, I'll pay it off. So I'm still in there, But it's it's like, okay, he's there. He paid off his bill. It's all good, and the account's not closed.
In that way, you're still not accumulating any
Right.
debt.
It's
And so-
not accumulating debt.
Yeah,
No.
yeah. So, yeah, that's what we've been trying to do. I was just curious your thoughts with that, with the balance in that. It's just, it's a tricky balance. Yeah,
It is. It's a game.
Just in response to your score dropping,
Uh-huh.
if you check it like in 30 to 60 days,
Uh-huh.
your score will be back up.
Oh,
It's just
really?
when you
Okay.
close an account initially,
Uh-huh.
they ding you, but in like 30 to 60 days,
It should
will
bounce back up. Okay. Well, I'll check it.
Yeah, check it and see.
Okay.
That's true. It happened to me.
Oh, really? Okay. Oh, yes, sir.
Yeah, I was just going to piggyback on what was stated earlier, that paying off your debt definitely is a good thing, and your score will return back to your optimum score. I don't know if everybody's going to return back to 850 or anything like that, but it will return paying it off. Now, although every financial advisor has different ways and different spins on things, there is one thing that Dave Ramsey states that I think is pretty good: paying off the smaller debt first and moving towards your larger debt.
Yes.
Ultimately, we want to become debt-free, and it is possible even with a home and a car.
Yes.
Because I've heard people say, well, it's impossible to become debt-free because you own a house. Not really.
Right.
Planning, just like the ant plants.
Yes.
The ant plans
Yes.
for the winter,
Yes.
storing up. We should do the same. That's scriptural.
Amen. Thank you, brother. Now, to check your credit score, credit report, which I would recommend doing at the least annually. However, you can do it weekly for free. Check all three of them. And what you would do is go to annualcreditreport.com. And the websites that I mentioned, we'll show them all at the end. But if you go to annualcreditreport.com, you can get all three of them, and it'll show you on there. So I checked mine, and then when it had the changes and it said hit detail as to why, it's like okay. So anyway, but the other reason to check, okay, that's good. You can change that. But the other reason to check it is you want to make sure that no fraudulent activity is happening to your credit. That's the real big thing, because when I did check, when I first looked at to see why my score had changed, I looked at a credit card, because some credit card companies allow you to get your score. So I checked the credit card company, because that'd be real fast to see, and they said, oh, the reason why is for delinquency, and it had something else. But delinquency was one. It's like, I'm not delinquent on anything, so then I'm thinking somebody has got to my account or something, or made up an account under my name, because if I'm never a delinquent, why would it say that? But they were just using a general reason why. That wasn't the real actual reason why. But then when I checked the actual reason why, then it made a little sense. Yes?
I just wanted to make a comment on Pastor Sivax when he mentioned paying off the lowest credit card.
Yes.
The individual had 2 credit cards, and it sounds good to pay off the lower
The lower
balance,
debt?
the lower balance. I personally would not do that, because if you have 2 cards and you might have a lower balance, but the interest rate on this lower balance
Right.
is higher than the other, you
Right.
would want to attack the one with the highest interest rate, because that's where you would save the most money in the long run.
That's one point that's true, but brother, go ahead first.
I'm just gonna push back on you, is that you do wanna pay off the one that has the lowest balance on it.
Can't-
Once you pay the balance off,
Uh-huh.
it gives you a little bit more confidence, and it gives you a
Okay.
little bit more push to go after the next one.
Okay.
So it's called the snowballing effect that I know a lot of people mention Dave Ramsey.
Uh-huh.
So that's kind of repertoire as far as the snowball effect is concerned.
All right, and I appreciate both. Now I'm going to let you know the average Joe, my method. Now both of you, I agree with. I understand both, and I agree with both, and depending on the situation. But what I did with mine, because I had a lot of credit card debt, and what I did to get rid of the interest is I got a card with 0% interest. And transferred the balance over. Now, when you do that, and I recommend doing it if you can play the game. To me, it's a game. But the ideal, well, one, you're at 0%. There is a fee that you're going to pay up front when you do that. But you cannot use that card again, because if you do, you're going to have that, you're going to be at that, whatever that market is. It can be 20%, and you'll be at that market. If you're late, you're going to be at that market. So what I would do is set up auto payment, and I would make an additional payment in addition to that. That way, I'm at 0%. The amount, though, is high. It's not a low amount, but I'm at 0%. My idea was not to be at the interest. It kills you. Interest will kill you. Go ahead, please.
Yes, I just wanted to ask, who are credit card companies governed by specifically?
I can't really say who they're governed by. They're I do not have that answer, ma'am. I do not know. Go ahead.
Okay, real quick, just some comments that's coming in online. One was information about closing the accounts. Great information, thank you. There's one, Dave Ramsey encourages to pay cash rather than credit. There's another comment that says, could you please repeat the question? I'm not sure which question that was. We've had a few. Repeat your question.
So we were talking about paying off credit, well, just debt in period. So let's just say that you had a balance on one card for $300. So you had another card, unfortunately, for a balance of $100. You want to start paying off the $100 balance off first, so you can get that out the way and knock that out the way. And once you finish paying off that $100, you take that money and put it towards the one that you have to pay on the $300.
Right.
We good?
Which would give the snowball
Right,
effect. Okay. Now, thank you, brother. Now, regarding paying cash, I do not have that much cash on me. I mean, I purposely don't have that much cash on me. At least I don't think I do. So because, well, one, because of theft. I wouldn't carry that much cash on me. The other is I rarely ever carry my debit card on me, because of theft also. So the only time I normally carry a debit card is if I'm going to Woodman's. So otherwise, I take it out and put it, with my other cards. I do keep a card on me, and the reason why I use that, well, one is to keep the credit rolling, but also for points. I get tremendous points on using my credit card. I mean, I'm talking hundreds of dollars, that are getting back in rebates and points, or either hotels or either airlines. So it's a bonus by using credit, providing you use it right. Now, if you don't pay that bill off before it's due, now I have all of my accounts set up for auto pay just in case I forget. But I do look at all of my accounts, most of my accounts weekly, to make sure, like, gotta pay that, and then just pay it, But I check it weekly, so I would disagree on that, the paying for cash. I would definitely go with the credit for the security, and also for points or rewards that you would receive from it. I believe it's a double on that. Always pay more, and if you do have a balance, not everybody can do that, so I understand that. So if you cannot do that, always pay more than the minimum. And when you look at your credit report, depending on which report you look at, because you have three different companies that are going to have reporting information, they show them in different ways. But on one of them, it'll show they paid the minimum. It's like that's all they're doing is pay the minimum. So the ideal is when I do pay, when I do have a two-way balance because they have to 0%, but I always pay more than minimum. I have them all set up for auto pay and always pay more than minimum, but not paying any interest. Yes.
Thank you for this topic. So my question is about the credit score checking.
Yes.
You said if we need to, we should check it weekly. I thought if you keep checking your credit score a lot, like opening your credit reports, it reduces your score. Can you speak on to that?
It depends. It depends if it's a soft check or a hard. That would be soft, and it's you doing it, so it's not going to really affect it. So it's okay to do it. And my recommendation is, you can do it weekly. I don't check mine weekly. I'm saying you by definitely at least do it annually. Incidentally, yes, you should check it. Or at least if not annually, at least monthly. That a person can do it. They can do it weekly for free if they like. But on a side note, if you do want to check it periodically though, to make sure there's no somebody got any liens on you or judgments on you, or somebody else tried to open credit in your name, that's the other reason to check it. Now, if somebody is dating somebody, I would highly recommend you checking each other's together. Say, hey, let's just on a date, let's just check each other's credit. This will be fun. You'll see how responsible the person is. If they got judgments on them, they got child support. So you want to check that. And also, just if you're dating, you want to check out CCAP at Wisconsin court to know if anything against somebody, or somebody got something on you. You just never know. Check it out. Go right ahead.
One thing I wanted to mention about a closed account or something.
Yes.
What happened to me is I had a credit card and I didn't use it, and they closed it. So I have to at least once a year make a charge. It could be $10 or whatever, but make a charge in order to keep that account open.
Wow.
Otherwise, and mine was like $10,000. It had the balance. It was gone. Boom.
Wow.
Score dropped.
I guess it depends on the company. I haven't had that happen, but I do have a card I do need to do something with, because I was going to close it, but it has a very high balance, so that's going to mess me up. Or I can just close it and forget it. But definitely, that's important, interesting.
Question for the comment. When that account gets closed for inactivity, it gets sheeted to the state of Wisconsin. That's why you see it on the state of Wisconsin surplus report, where an individual, if an account is closed, all surplus property goes to the state of Wisconsin and
Okay.
your name appears in the paper saying that you have
And who's going to read that? Yeah, you're right, and I forgot the unclaimed property.
unclaimed
It's on
property,
unclaimed
so
property.
unclaimed property, so
Uh-huh.
that it would go there,
Right.
and eventually the person would be able to claim. You'd be able to claim it eventually
Mm-hmm.
if something happened to your father.
If I looked under the
If
unclaimed
you had
property.
looked- and now there's a process where now they're starting to be proactive, because back in the day with the company I retired from, there's called an escheat process,
Uh-huh.
where after so many years, money has to be turned over to the state.
Right.
The state then requires to send out a letter to the last known address,
Right.
and that causes the process to start, or it's published in the paper.
Right. Okay. That is true. Thank you. I forgot that, and I should know that because I see that up at work. I'll mention work in a minute. Actually, I can mention it right now because the next point is taxes. The taxes, and I work for the Department of Revenue, and I've been there for 31 years. And I was an auditor did auditing for 10 years, and then I'm in IT for about 20, and I did about 1 year in criminal investigations. Now, that's another thing, though. Taxes is discriminatory, because now that I'm single, my taxes went up. They now take $200 more a month out of my check. $200 just because I'm single. That's discrimination. That is so wrong. But it's like, man, so if you are not married or have dependent children, you're penalized. You know, that just ain't right. And see, I didn't know that. So single people, I am sorry. Okay? I did not know. I was married since I was 18. I was married for 42 years. I did not know what you went through. This is a shame. It's a shame. On taxes, tax season filing season coming up. When people get big refunds, because they think, oh, I'm going to get this big refund. What you did is allowed the government to use your money all year long, interest-free. You just gave them extra money. So don't be looking so forward to a big refund. However, on a W-4, don't put exempt, because nobody's exempt. And don't put 4 children if you only have 1. That's wrong. And I know some people, they did well, for 6 months, what I do is, I'll just be exempt. Then the next 6 months, I'll just make up for it, Don't do that, because then you end up owing. And then that's not good. That's not good either. You want to have like a balance, like an even balance on there. Pastor 5X.
Okay, you're getting a lot of traction here. Part 3. Okay, 2 things. The more money you save will allow a person to use less credit. Credit is good, but must be used with caution. That's a comment. Okay. And then there's another one here. Question. Would it be wise to use your savings to pay off your mortgage? Interesting question. I'm not sure who that would go to. Brother Kidd may have a comment on that. I'll give mine, and Brother Kidd will give his, and we'll see how we go. For me, I would say yeah. I pay that house off because you're paying interest on it, and more than likely you are paying more interest on that loan than you're getting from your savings. Your savings is probably giving you 1% or 3%, and you're probably paying a mortgage interest of 7%. So I would say, yeah, I would take that money and I would pay the house off, because then you have freedom. You have a lot more freedom, when you're paying that off. So I would say yes on that, Brother Ken. You have a comment on that? Can I just comment?
I do have a comment. I think that it depends on where you're at in life.
Okay.
Also depends on your situation. Some people use that interest, as far as the mortgage is concerned, as a tax write-off.
Sure.
It's kind of a horse apiece.
Okay.
It just
All right.
depends on where you're at in life, I think.
Okay. Today, somebody had, after service, somebody had told me they still haven't got their tax refund. So that's another reason why you don't want to look for a big refund. I know somebody who their 2020 taxes, they still haven't got their $8,000 refund. So the government's just using that money. So don't look for that. Now, if you owe taxes, you want to be sure to pay that at least by October. Do not, ignore letters that you receive from the government. Um, that's not wise. What happens, even if it's not true, even if because when I was an auditor, we would do what's called assessments on people that don't file their taxes, and it'd be some crazy number. I mean, let's say they say you made $100,000, even though we know you did not make $100,000, at least not legally. That because they already know what you make anyway, so that was reported. They already have that information. They just want you to file. If a person does not file, what they do is do an assessment and just make up a number just to push you to file. I mean, that's their logic. If a person gets this crazy letter and say, "Oh, you owe $10,000," like there's no way I owe $10,000. But if you ignore that letter, after 60 days, it becomes law. So you can do all you want, but unless you go up to the state Supreme Court, you're probably not going to get anywhere. They will garnish your wages. They will take your car. You have an extra house, they'll take that too. They will seize your bank accounts. That's what they do. So if you owe or if you get a letter, just act on it. Just act on it right away. Yes, I'm sorry.
I was just going to say on this last issue of taking your savings and paying off your house, I don't like that approach. Because if let's just say you had $100,000 in your savings, it would pay off your house. There's a lot better things you can do with $100,000 that can make you money and keep consistent money coming in rather than paying off a house. Because at the end of the day, it's about legacy. And if you die and that house is unpaid for, it's not the end of the world.
Right.
It's not, because you leave whatever equity you have in the house to you. I was just saying the most effective, you want to use it most effectively. Paying off a house won't do any, so your house is paid off, but you're not making any money off that $100,000. I understand, and I do agree with you, but it like Brother Ken had mentioned, though, it depends on, where the person is at. Because you could give somebody $100,000, they still wouldn't know what to do with it. So it wouldn't matter, So it depends on where the person is at, or the the knowledge that they would have to know what to do with that. That's all. But I understand what you're saying now. Okay, go ahead.
Question about those exceptions. So if you are getting a refund and you really don't want to get a refund, how do you do that if you don't add on those dependents and everything? How do you do that?
You mean how to prevent to get the refund?
Yes.
Well, then you would change what's on your W-4. If you're the only ways that would happen is you would change W-4, but you don't claim what you shouldn't do. But otherwise, yeah, okay, you'll get the refund.
I don't understand that.
Oh, okay. Take the.
You can change your withholdings.
Okay.
As far as that's concerned. That's how maybe you want to, let's just say, take it to 1 or 2, or if you want to increase it so you don't get that much money back at the end of the year. So that's a strategy that some people use.
It depends. If your income changes or situation changes, then yes, you would change it. You can change it as much as you want. It's a accounting thing that you would have to do. Yes.
So I am not, let me be clear, I am not looking to do anything wrong. This is a legitimate question based on, information that was shared with me. Is there any type of job that you can have, any type of employment where you are getting income where you don't have to pay taxes?
No. There really isn't. There's a book, Publication 17, that comes out by the IRS, and I love the book, but what it does is give a bunch of information. You can look at it online, and on there it'll tell you the types of income, and it'll give you all the types of income that are required. And the last line normally says, at least in the past, what did it say? Including illegal income. So everything, even if people selling drugs, they are required to to pay taxes on the drug money. That's what got Al Capone in trouble. He didn't pay taxes on his illegal income. So in Wisconsin years ago, I mean, when I started, they had a marijuana tax that people who sell marijuana, they had to have cigarettes have tax on them. They were supposed to do that with marijuana. So if they got a drug dealer, it's like, you got these drugs, you ain't pay taxes, man. So they get them double whammy. So no, all in America, all income is taxable. Yes.
Brother Joe, in line with what you're saying, a lot of people use this. They say, "Well, I didn't get a 1099 for that." So anything they said, well, it was under $600. I think Sister Williams may have been thinking that under $600, whether you get the 1099 or not, it's still reportable.
Right.
Correct?
That's correct. Let
me go on record.
I know it's not you.
Yeah,
You're selling cookies on the side. You're just
No,
wondering.
I love the Lord, and I'm not trying to defraud the government. That was a legitimate question
Right.
because of information that was being shared. I guess as a follow-up, is there ever a type of employment that someone would have where, I don't know, I know we get taxes taken from our check, but where they're getting the taxes taken out for the government that would cause them not to have to file taxes themselves?
No.
Okay. I just want to give guidance to folks.
Yes.
Subject matter experts.
Okay. Now, even those people who do make that under $500 or $600, then they don't get a 1099 or W-2. They are still supposed to report that. That person who fixed your plumbing and you pay cash for, they're supposed to also pay tax on it. And when they do say, we don't take credit cards, we don't take cash only, but chances are they're not reporting that. Now you're not the one to do anything about it, but chances are they're not. Okay, well this one should be quick. Social Security. I don't think so. You cannot stop the government from taking Social Security from if you have W-2 wages. Even if you don't have W-2 wages, you may have income and you're filing taxes. You cannot stop them from taking Social Security until you reach full retirement age. Even then, they can take it. If they are taking that money out, that does not mean you will ever see it or anybody you know. Beverly worked for 45 years. And all that money that put in Social Security, nobody's going to see any of that but the government. I had an appointment with them, which they could have just told me over the phone. They did do it over the phone, but when I made the appointment, they could have told me right then. Basically, as far as like spousal, getting income from your spouse from this Social Security, if you make over $19,900, you get nothing. Until you reach full retirement age, which right now is 67. When I reach 67, then I either could take hers or mine. Well, of course you would take the higher, mine's is higher, which means they keep it. So it's a shame, but that's how it is. So there's discrimination against people if you're single. Yes, it is. Now, or if you don't have children or somebody, to benefit from it. Now, can I go to the next one? I can't go? Okay, go ahead, sis. You go ahead. Okay.
And if you do, like I receive my deceased husband's benefits because I said, what's going to happen to his? And they said, well, it revert to the government. Uh-huh. I said, no, it's not. So I decided I would take his. Okay. And so I am, even though I'm retired, I am still working. But like you said, there's only a certain amount that you can make. Mm-hmm. And anything over that, for every $2 that you make,
they take
over what they say, they take a dollar of that. Uh-huh. So you have to be very careful. So I do my math. I do my math.
Y'all have to
But
talk to her. Yeah, they had told me that. Was like, when I was thinking, like, ain't no way. But that's good. If you can do that, that's good. So it is a way to do it. You do have to do the math. It is a way to do it. But I thought of like, ain't no way I'm be able to do that. It's no way. But it is possible. It is possible to get some of it. So you go for it, girl. It is. Now, the next one, we're going to end on this one. This one is on life insurance. Now, I used to sell life insurance, so I have a bias. And I'm going to tell you that there's, to me, there's basically two types. There's term and there's whole life. Whole life can have different packages and products like universal life, and they probably have other things too. But the term is just what it says. It's a term. Basically, with your whole life, it's going to stay with you for the rest of your life. Premiums do not change, and you have cash value. With the term, the premium is only for a term, and there's no cash value. Now, 27 years ago, was it 27? 27 years ago, I had to calculate, how much life insurance do I need? For my wife, not for me, but on me. And I calculated I would need like $250,000. Well, I could not afford $250,000 of whole life insurance. So I get a 20-year term policy for like $25 a month. That was a 20-year term. I didn't die. So 20 years, it was a 25-year term. So since I didn't die, but I still felt that, hey, she should still have $250,000. We don't quite need that, but I'll have that on me anyway. Now, didn't have half of that as much on her, but as far as me, I wanted to make sure that she was, comfortable and everything was paid off. So I figured, like, I'll still get another $250,000. Well, instead of being $25, 25 years later, it's $118 a month. Now, I can pay $118 a month today. Now, 27 years ago, I couldn't. So there's a difference there. Now, I could not today even afford $250,000 of whole life insurance. But the thing is that it's important to determine how much you need and then how much you can afford. Yes, the whole life would be a better product because you're going to have the cash value, it doesn't change. But if you can't afford it and this is the amount that you need, I would say get what you need. Get what you need. Now, my car insurance, health insurance still costs more. Well, not my car insurance, but my health insurance definitely costs more than my life insurance. I may not need my health insurance, but I will need the life insurance. Well, I don't need it, but actually, nobody really needs it now. It's important though to have life insurance because we don't know when we're going to die, but I can guarantee it that you will die, and so that you want to be covered. Now, if you're single though, if you're single and you're not really worried about leaving an inheritance or anything, but you do want to make sure that you have a proper burial, funeral can cost you a good 10 to 20K. So just be prepared on that. Yes, my brother.
Brother Joe, not only is life insurance important if you die, but one of the new provisions of life insurance that people need to take into consideration is the fact that there is a terminal illness rider that's tied to a newer life insurance policy.
Okay.
That can help to pay for your long-term care if you're hospitalized. It's a rider. Okay. And the reason I say that people may want to think about that is because a lot of people think, last thought, and I don't want to cause an uproar, a lot of people think that Medicare is going to pay for your long-term care. It will not.
Okay.
You need a way to pay for your long-term care if you're in an assisted living or a nursing home, and the way to do that sometimes is through a hybrid, using your term policy that has a rider on there for terminal illness, or just simply taking out a long-term care policy that's a hybrid that will pay a life insurance or a assisted living death benefit for health care.
So now, that is, since it's a rider, though, that is something you have to request then?
Nope, it's the policy, the way the policies are written now. Some of the policies, they're called a hybrid. Okay. Because long-term care by itself is very expensive. You can have a rider, or you can have a long-term care life and health rider that can pay for your health care and men die in an assisted living facility quicker than women do. So women need to have long-term care, some type of provision to take care of their health. Because if you don't, then you go on Medicaid, and then all your assets are taken away by the state of Wisconsin.
Ouch. So that policy you wrote me has that rider.
Oh, I'm your agent. Oh, that's right. Good point, brother.
All right, now we're at time. I thank you all very much. Maybe we'll have a part 3. Oh, just wanted to let you know, as you're coming up, brother. Since tax season is coming up, please avoid going somewhere to have your taxes done unless you got a business. But if you just have W-2 income, you should be able to go online and use a free software or either buy software for it to be done. If you make under $54,000, you can go to a VITA site like SDC to have it done for free. Those are different options. I am not one of those options. Now, brother, brother, can you please show those websites? I just wanted them to see something. Just want to mention something on these websites. The first one is on the annual credit report. The other one is on CCAP. The third one, we didn't even get to the fourth one. We'll get to the fourth one another day. But the third one, y'all can take the fourth one down. But the third one is for life insurance, just so you can get an idea of what rates are. I mean, your health would matter, age would matter, and all that stuff. But I mean, just as a general idea, just what rates would be from a whole life to a term. Of course, it's on you what to do. But hey, thank you all. Have a blessed day.